Crypto Hotep here with another trading video. Guys, this trading video is going to be in relation to my current trading strategy and what my process is when I'm taking trades specifically, not on the investing side, but more so on the trading side. Now, this is financial advice. Before we begin, please do your own due diligence and research in crypto, stocks, metals, whatever. This video is also sponsored by the good folks at Coinbase. We do have a partnership with them. If you don't have an account with Coinbase, feel free to use the link in the description. Even if you do, feel free to use the link in the description because you still could help support the channel and support Crypto Hotep. But for the first and foremost, these videos are for my own edification, and I do them for me to make sure that I'm on the right path with my strategy. This strategy may not work for you, but I found that this is probably the less stressful strategy for trading, requires less work, and does still give you very good and can give you triple-digit returns. So let's jump into it. So the strategy that I have has about 7 steps here, and I can make the case for one more step. But we start with Heikin Ashi, supply and demand, 3 is chart patterns, RSI or relative strength index, volume, confirmation, and then sizing and proper risk. And number 8 probably be averaging down. Yes, averaging down or up. So those would be the 8 steps based on the recording, because as you guys know, I'm using a different recorder right now. I think right now they have some limitations on the recording, so we may have to chop these up into different parts. But I would like to get through with Heikin Ashi and supply and demand so you can see how I'm looking at charts on a day-to-day basis. The first part about what I do when I first look at charts. So say, for instance, we just pull up Render, the crypto Render ticker RNDR. The first thing I do is I switch my regular candlesticks, and I don't even have my regular candlesticks on, but I'll switch these to Heikin Ashi, which are right here. Heikin Ashi is a Japanese candlestick which brings the average of price into play. That's why, as you can see, there's a difference in how this looks, and this smooths price out in a very clearer picture. So this works really well with stocks too, because sometimes when I'm looking at stock regular candles, or when I did, it was very confusing for me because it'd be a whole bunch of gaps and all of that. And I like this because, yeah, you don't have the gaps. And if you wanted to see those gaps in price, you could just flick on your regular candlesticks, but that's okay with me. I'd rather get a clearer picture of the candle than kind of be confused. So again, this is my strategy. Works for you, great. If it doesn't, there's tons of other traders that you can watch on here. So that's the first thing, is Heikin Ashi. Again, Heikin Ashi means average bar, I believe, and it gives the average price, which is why each bar starts at the middle of the previous bar. So just remember that when you're looking at the candlesticks alone, you're not looking at the actual price. In TradingView, you can put the actual price on the right axis, which I have done, just so I know what the actual price is instead of the average price. And I've used Heikin Ashi, and again, this is one part of my strategy that relieves that stress in trading as well, because you can hold your runners a little bit longer here with Heikin Ashi. The second thing is supply and demand. So supply and demand is a concept in trading where supply and demand show extreme bullish and bearish pressure, buying and selling pressure. So the concept is that we want, as traders, we can't move the markets ourselves. We rely on big money, institution, banks, so forth and so on, to move those markets and to create big price swings. Well, we want to buy when those institutions and banking partners and quote unquote smart money and big money, when they're buying. The good thing about trading is it will leave footprints with supply and demand where you can see that. So, and even the better thing is with Heikin Ashi, it makes it really, really easy to see when these big moves come about. So with me, what I look at with supply and demand is I'll look for these levels. So again, demand is bullish pricing, bullish price action, and then supply is bearish price action or selling price action. So naturally, you would like to buy in demand levels and sell in supply levels. Well, Crypto Hotep, why don't we just place a pending limit order in a demand level and a pending sell order in a supply level? There, we're done. Yeah, it's not that easy. So with my demand levels, what I look for is I look for a previous bearish candle and then a move up such as this right here with at least 3 bullish candles after the bearish candle for a demand level. So here, this is a fantastic level. This caught my eye very quickly, and I'm going to draw it out here with my rectangle tool. Now, how do I draw these out? Well, I draw them out basically using the base of the candle. If I'm drawing a demand level, use the base of the candle and draw that down to the wick of that candle. Now, sometimes I will go a little bit further if I look left and then I see a low that's a little bit lower than their wick. Then depending on how I feel, I will draw that a little bit lower, but I usually try to keep consistent with what I just said. Now, I also have a template for weekly demand where it will change this zone color into green. Okay. So next, I will look for my supply levels. My supply levels are selling areas of extreme selling pressure. So again, the same rules apply. 3 red candles now, because we're talking about selling, after the green bullish candle. So remember, the red candle was before the green bullish movement. Now we're talking about selling pressure. It's the green candle before the red selling movement here. So as you can see, just because there's been a lot of selling pressure in the crypto market, unfortunately, these past couple weeks, we have a level right here. So I'm going to take the base, draw my rectangle tool up to the wick, and then draw that across. And then I do have a template here for weekly supply. And then we also do have a level here, right here. If I'm following my rules, which I would like to do, we have a level right here as well. But Crypto Hotep, that looks a little bit huge. I don't want to draw that level. No problem. So typically when I have a level like this that large and that hasn't really broken or moved anywhere in terms of price, I'll look to the left. So I'll scroll to the left and then I'll see another area right here where that 3 candlestick move to the downside applies. So with me, I see this move here, base of the candle, up to the wick. I'm going to cover this wick as well and then pull that over. So as you can see, price came down, then price came up into this level, did not break this level at all. Price did not break it, meaning when I say break, I mean price didn't do one of these numbers where it broke through and now retested and now we're going up. It didn't do that. It literally wicked the area and then cascaded down. So I will draw this across. This is a very good level because it's been respected one other time and it's legitimate. And now, because it's been wicked or tapped or mitigated or whatever word you want to use, here I do mark it as a mitigated area because I have to keep this in mind. So when price comes back into it, price may blow right through this because it's already tapped into this area one other time. And I like to point out the area that it's tapped into right here. Now, Crypto Hotep, these areas look a little big. What do you do to trim or refine those down? Well, what I do is I'll go to my daily time frame because I start on the weekly time frame for all of my charting. I will go to the daily time frame and then I will go to the beginning of that zone or box or rectangle that I made, and then I will refine this down to the daily area where this price move initially started. So we have 1, 2, 3, price came down. Didn't come down right here. These are only 2 candles to the downside right here. So I would use this area because you have a nice basing of candles right here where you had a nice little fight between the bears and the bulls. Bulls almost looked like they won, and then bears came in. So this is a legitimate area, and I would take the wicks, or I would take the base of that candle here, draw that over, and that's going to be my area there. Now, if I scroll to the right, go to my supply level, this red level here, it's a little bit different story. We have bullish price action up. We have price coming down. So here I'm taking the last bullish candle before that 1, 2, 3 step down right there, because you can see once price retested, it retested perfectly into that zone, and then boom, sold off. And then we look into our daily demand, or sorry, weekly demand level. We have 1, 2, 3. Your bullish or your bearish candle before the bullish price action is right here, but we also had an area where we had another demand level within the weekly level that abided by my rules. And what I mean is, if we look here, this level, this is a bearish candle, 1, 2, 3, right here. So usually if my weekly level encompasses those levels are very close, I will try to refine my level, but keep in consideration that I have 2 levels right here, 1 and 2 in there in this one level. So that makes that level even more powerful to me. And so in terms of the daily, the weekly supply and weekly demand levels, that's how I will play and how I draw those levels out. Just for time's sake, we'll probably end this video here. I usually want you guys right now know my rules in terms of supply and demand. You have to have at least 3 candles either in bullish price action for demand or bearish price action for supply. You use the previous opposite candle to start your mitigated zone or to draw out your weekly demand level. And then probably the last rule that I'll say is I always look for fresh levels and I don't cut candles. And what I mean is I'm not cutting through candles. So I'm not drawing this level out right here because based on my rules, this legit is a demand level. It's demand level. You got 3 bullish candles. Here's your previous red candle. You draw that level out. But I'm cutting through this price action, and so I don't want to do that. I want fresh levels for the most part. Yeah, they can be mitigated like this, where they can be tapped in, but as long as they're not broken, where price has broken through, retested, and now it's breaking, now it's on and upward, we're not worrying about those. Okay. The next level I potentially could look at is something like this, but I'd be very cautious at this level because it's so close to this weekly demand level as well. If anything, I'd probably just draw this out a little bit more down if I wanted to, because this level is so close. The next level I would look at is this level right here if I needed to. So if price does somewhat break down this weekly demand level and this weekly demand level doesn't hold, I will check out this demand level right here. But we will cut this video short for today. As always, if these videos were helpful at all, feel free to like, subscribe, comment, let me know what you think. And guys, as always, thank you and happy trading.